For the wrong vendor, you could come in well below and they'll never even consider your offer. But then there's other developers and vendors out there who will, add 100K to the price. And if you come in 100K below, they might accept it.
We are back in your life, and today we want to pay as little for properties as we possibly can. How to negotiate on a property. I am joined by Lighthouse's property director, Adam Farrell. Adam, you going to tell us how to get a bargain?
Great, yeah. So negotiation can be a really fun part of the property buying process, provided you know what you're doing. So today we'll cover some tangible tips and tricks that everyone can apply through the process.
And you and I did do a webinar yesterday. We'll put a link somewhere so you can see that if you haven't seen it already. And just make sure you also are registering to our webinars because we're pretty much doing them every week at the moment. But there was a question around I hear you make your money in the buy in terms of getting it at a good price. Do you agree with that?
Yeah, to an extent. I think it depends on what sort of property you're buying. If you're buying existing and you're doing renovations and flips, obviously you make the money with the renovations and the tangible value that you add. You obviously can save yourself a lot of money at the buying point if you negotiate well. But I mean, if you're buying on a long timeline, we spoke about this a bit yesterday, most of your money is actually made just by holding it in the long term. But I guess to validate that point, you make most of your money in the buy if you're buying the right asset, and you lose most of your money if you buy the wrong asset.
Yep. And Mike used the analogy of buying a Ponsonby villa in the 1980s and going whether you spent $30,000 or $31,000, you're still pretty bloody happy now with it being worth $3 million. Adam, I want to start with timing. So when is the right time to start to negotiate on a property?
The right time to negotiate. The actual negotiation itself should be starting a little bit in advance in terms of understanding the market, making sure you're well informed and you're educated with what things are actually worth in those areas and with that property niche. Making sure that you're going through, doing a little bit of due diligence on the property upfront so you know what you're actually negotiating on. And then realistically, when you're actually, making offers and trying to save yourself some money here and there, it's when pen goes to paper. That's the most important part when you're actually making real offers. Because agents and vendors and developers, they're in the market all the time with clients and buyers just throwing out random numbers. And so for a negotiation to be considered or an offer to be considered, you need to prove that you're serious about it. And quite often the only point that vendors or agents will accept that you are serious is when you write it down on paper with your signature.
Yeah, I think that's a really good point, because if somebody offers me I want $600,000 for this property, immediately I go, wow, I'll pay $550. But if I haven't done any research into the market, $600,000 might be a bargain. It's kind of like a Briscoe's sale. Everybody, have you ever shopped at Briscoe's and paid full price, Adam?
No, I haven't. Definitely not.
Yeah. You're just an absolute goober if you're paying full price. If even though they just mark up the prices, then give you a discount, you feel better with it, right? And there's a human psychology that everybody wants a bargain.
Yeah, it's funny you mentioned that. It's a really good segue into, so a lot of people ask me how much should I offer on a property? And just to segue maybe a little bit further into a separate topic about, how to start the negotiation. It's hard to give a rule of thumb, because some vendors out there are kind of like a Briscoe's, where they mark the prices up considerably, knowing that people are going to come in and lowball. And then other vendors are really reasonable and they try price really accurately at market expectations. So if you follow the tactic of, trying to perceive an asking price like Briscoe's, for the wrong vendor, you could come in well below and they'll never even consider your offer. But then there's other developers and vendors out there who will, add 100K to the price. And if you come in 100K below, they might accept it. So
actually, it makes me think about when I got my car last year, and I was like, nobody pays full price for a car. You negotiate the price on the car, and it was whatever. And I offered my price, and they were like, we don't do that anymore. You have to pay the price. So we can get maybe $1,000 off, but that's it. And I'm like, this just feels wrong.
Yeah, that's why context is super important in terms of doing your research and making sure you're well informed on that market. Because like I said, when you make the offer, you kind of want it to be strong enough to save yourself as much money as possible, but not so strong that your offer is completely dismissed and never considered.
Yeah.
And being well-informed and educated is super important in that process, because there's some developers, as I said, who will mark the prices up considerably higher than what they'd actually accept. And there's other developers where I have to work for a couple of days just to get $5,000 off. And if we came in with, an offer price 5% below their asking, they would just throw it in the bin and you never hear back from them.
Yeah. And I do agree though that whether a property is marked at value, below value, or above value, if you understand what like a 2-bedroom property with 2 bathrooms with this quality of build, you can find some comparables. It helps you give you much better of an idea opposed to whatever the sticker price is on that particular property on that particular day.
Yeah, and sometimes like educating yourself can help directly in the negotiation by simply just putting forward your case. There's been quite a few examples where I've been negotiating for clients, and let's say a developer had their asking price at $749K, and none of my clients were buying them purely because I thought they were overpriced. And then once I let the developer know, hey, these are the reasons why clients aren't making offers at this price, this is where we need it to be. In many examples, they've adjusted their asking prices to match accordingly, and we've saved clients like $50K off just by understanding the numbers. And then just to speak a little more about timing, a couple of things, particularly in the new build space with developments, there's kind of 3 key areas where you can get the timing right, or timing can work in your favor. First is a pretty obvious one, which is an old listing. The longer that a listing is available, the more a vendor will consider offers that are further away from asking price, assuming that they're motivated to sell, which pretty much every vendor is. The second time is a new release. Sometimes vendors are more motivated, or developers are more motivated to get some momentum and some runs on the board, so they'll cut some discounts or be a little more flexible to start with. And then the final one is when a development's almost sold out and they just want to move on to the next project and exit these assets as quick as they can. Or particularly if a development's already completed, they're just burning cash, holding onto those properties. So nearing the end of a sell down phase of a development, it can be a good time as well.
When you think about the current market that we're in, and say if we're in 2021 and everything's really hot and people are just trying to buy whatever they're trying to buy, what do you think are, I guess, the pros and cons to the current market we're in and how we should be thinking about when it comes to negotiating on price?
I mean, we're in a buyer's market. I think it's all pros at the moment for buyers who want to negotiate, in the sense that market movement is pretty slow. There's not a lot of volume. It's taken quite a while to sell out developments if they're priced incorrectly or if the asking prices are too high. There's a lot of saturation in particular niches of the market, which means prices have fallen, which obviously works in your favor as well.
What are some of the saturations that you're seeing at the moment?
Just in the new build space. New build space in particular, the whole market's obviously fallen with interest rate hikes and COVID and all the rest of it. In the new build space, there's a lot of saturation in particular suburbs, particular areas, particular property types. I guess maybe that is one con to consider with the current market, is that there's unfortunately a lot of crap out there, and a lot of properties that probably aren't going to be ideal investments. But the positive of that is if you know what you're looking for, those bad investments are still pulling down all of the prices in the market, including the good properties. So provided you know what you're looking for, you can secure a really good deal with those good properties, thanks to the saturation of bad properties out there.
Can I give you a con that I think about quite a bit at the moment?
Go for it.
Clients' expectations. So they think that everything is such a mess that they don't just get a discount on where the market is compared to where it was, but some sort of additional premium.
Yeah.
And that means people negotiate to their detriment, which goes, I'm just going to keep lowballing people until I get something. And at some point, we know interest rates have come down, prices will move at some point, and they're going to miss their opportunity. That's one of the real things I worry about at the moment.
Yeah, I get that. Something that I see is people get too engaged with trying to win the negotiation rather than just setting clear parameters, knowing what something's worth and saying yes when the right opportunity presents itself.
Yeah.
And I'm really guilty of this too. Sometimes I'm competitive, so naturally in a negotiation, I want to win. I want to win for clients. I want to win for myself in these negotiations. It doesn't happen only with property. It might be on Facebook Marketplace or whatever. You're trying to get a really good deal. And, it can be such a nominal amount. So
Yeah.
understanding the true value, setting some really clear parameters of what you can afford, what you'd be happy to pay, and what you're trying to achieve. And once you hit that mark, just be ready to say yes as well.
You won't go above $130 on your collectible Pokemon cards on Facebook Marketplace.
Pokemon's not my thing, but I
It's
recently...
cool. It's, there's upside. It's a great investment. And catch us for the next episode where we talk about Pokemon cards. No.
I've recently moved into a new property, so furniture's been the big point of negotiation there. And there's been some examples where I should have just said yes. Should have said yes. Something was worth it, and then someone else bought it from under me while I was in the middle of the negotiation, and I regretted it. And this happens with clients with properties all the time. Sometimes it gets stuck on 2, 3, 4, 5 grand, and they miss a great opportunity purely because they were hyper focused on that little win.
Can I give you like a little warning on buying furniture off Facebook Marketplace?
Go for it, yeah.
So when I was a grad and I had no money, I bought a secondhand bed off Trade Me.
Yeah.
And it was from like a nice, I went to it was seemed like a nice house, decent place, bed bugs. And I was written by bed bugs for like months. I had to do like a bomb and exterminate all the bugs and stuff. And so anyway, just be careful.
Yeah,
right?
I do have a little example currently as well that might be a little more applicable to what we're talking about, which is that I bought a couch sight unseen, brand new off Marketplace. The pitch was good. The description was good. Everything seemed great, looked great. Went and picked it up. And it turns out it's just a Temu couch. That's probably worth $50. I paid $600 for it, which was really disappointing. So moral of that story is when you go to negotiate something, make sure you've actually checked it out and you know what you're negotiating on.
Side story, I'm $550 richer right now. Okay, so that's a little bit on the negotiation side.
Yeah.
Tell me a bit around, we can negotiate on things outside of just price, right? Which is where probably a lot of people don't think about. They're thinking about $1. There are other ways we can cut this up.
Yeah, 100%. I mean, there's a couple other ways outside of purchase price that we can negotiate with cash itself. Cashback is a big one. And quite often we do this with clients, particularly around that new release phase for developments, because when a developer releases a new development, their goal is to maintain the highest possible sale price so that it maintains expectations for the upcoming sales. But obviously, we want our clients to still get the best deal. So a good way to have a win-win is to come in at asking price with your offer, but then negotiate, say, a $30K cashback as well. So on paper, the developer wins. They can show everyone that values are higher. And it actually works in your favor as an investor as well because it maintains average sale price in the development. But then obviously you get 30K cashback at the end.
How good.
Which is great. So cashback's a big one. Other simple perks that are kind of similar to cashback is furniture packages or other upgrades to your home that you want to include that you can negotiate in.
Give me those sweet Smeg appliances.
Like carpet upgrades, kitchen upgrades, appliance upgrades, additional heat pump, those sort of things that you can factor in.
Tell you what, like when you get the extra plush carpet in a property, feels good.
Yeah, it does. It does. It makes it feel good.
I want to sink in that carpet. I want it to be like a beanbag.
Aside from upgrades, you can also, one thing that I think everyone should actually spend a little bit of time considering is the legal clauses and the timeframes around deposit and settlement. Those can work either for you or against you, or they can help you save cash on purchase price or not. So a couple of examples, if a developer or a vendor is super set on their sale price and they won't alter anything else, you can negotiate timelines and clauses and deposits payable in your favor. You might be able to pay a smaller deposit at unconditional, which is nice because you hold on to more of your cash. You might be able to settle a little bit later, which means your mortgage repayments won't start till later. And the opposite can be true as well, where if you're really trying to lower that purchase price down, if you reduce your timeframes, offer a deposit sooner or a bigger deposit, sometimes it's more attractive to a vendor or a developer, and it might make your offer more attractive. Potentially, you might be able to secure a lower purchase price as a result.
Yeah, we had a property we purchased earlier in the year where we knew a bit more cash in the deposit would probably help us. So we offered more than 10%. And also we offered a closer settlement to the unconditional date. So there's lots of different things you can play with. And you just get a bit creative, right? And the other way to think about it is going, what is the vendor wanting out of this transaction? What are they thinking about? And a good way to do is also ask, is going, well, if we can't move on this, what are these other things we can move on?
Yeah, 100%. And that's a really important point, is just ask for what you want. You know, sometimes they'll say no, but sometimes you might be pleasantly surprised. I've spoken about this example in a previous podcast, but there was a time where I was negotiating a property for myself out in New Lynn in Auckland. Townhouse, really nice, high spec. I was going to live in it myself for a while. was getting towards the end of the DD period, and I went out there at night just to check out the neighborhood. I was like, you know what, I should probably park in this carport and see what happens here. And I couldn't get the car in. It's basically only suitable for a little hatchback or a Swift or something like that, which I did not have at the time.
Not fitting the G-Wagon in.
Not quite, no. And so anyway, long story short, because I was like still quite excited about this property, I was like, to live here, I'm going to need a different car. And I actually negotiated that if I went unconditional and purchased this property, the developer would buy me a different car up to $15,000 purchase price. Yeah, so don't be afraid to ask for what you want.
Yeah. Don't ask, don't get, right?
Yeah.
Okay, well, we've been talking about theory a little bit, Adam, but I'm keen to get into some actual real-life case studies because those practical tips really help. And we're going to do that after this break.
Buying a property is one of the biggest financial decisions you'll ever make, and a mistake can cost you thousands. At Lighthouse Property, we help you find the right home or investment and negotiate with confidence. Check out the link in the show notes below. Now, back to the episode.
So, Adam, let's talk about some specific examples. What are some times where maybe a client has pushed back on wanting more and you've gone, actually, this is a pretty good deal?
Yeah, I mean, that happened really recently with a client who went unconditional last week, where we managed to secure them one of the best deals that we've seen lately, which was a property that was $40,000 cheaper than every other unit that had previously sold in the development. Pretty nice unit, corner unit in a small development, which obviously we try to focus on by a good developer. And there was probably one or two little things that you could point out that were less than ideal, just in terms of not being a standalone home and not having the same privacy as a standalone home. And they wanted to go back and negotiate on that price. And when they came to me saying, hey, like these are the factors that are less than ideal, can we ask for a discount? I said, no, because it's already $40,000 below asking price. And it's by far the cheapest unit sold in that development so far. And I know that if my clients didn't buy it, someone else would snap it up very quickly. The vendor knew that as well. So there's no real room to negotiate. So I just had to push back on them a little bit, set their expectations accurately. And fortunately, they went unconditional and now have a great investment property.
Yeah, I had a client maybe like 2 years ago, and wasn't dealt with by you, Adam. Otherwise, I'm sure it would have gone far better. Where the real estate agent had been like, "Hey, you can buy this for $700,000. It'll be like they want $800, but like I've talked to them that you'll be able to get it for $700,000." And they were actually pretty happy with the $800,000 to start with. They never were thinking about price. They were like, looks good, blah, 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 quite like passive. And anyway, they put down $700,000 and it ended up becoming like an auction going back up the other way, where their expectations were there. They got drawn down to this price, and then the developer kept bringing them back up with price points as well. So I think that in terms of where your expectations are at the start and where you see value, you've got to be really careful with that in terms of who you're working with, the experience they're giving you. Otherwise, something where you're like, this was all sweet, you end up having a bit of a bad taste in your mouth because you're like, well, I thought I was getting for this, then this, now I had to pay somewhere in the middle. If you just went from 800 to 750, everybody would have been happy.
Yeah, I agree. And your source of information, I mean, just like anything else in financial services, is really important. And unfortunately, the real estate space has a bit of a mixed bag of reputations and experiences. And it is pretty common, because obviously always real estate agents are serving the vendor. It's their job to get the best possible price for them. And they're obliged to do that as part of their responsibility under the REA Act. But sometimes they are a little sneaky, and they will say something like, hey, that price that you mentioned you can afford, we can make that work. And then once they get it on paper, now you're kind of hooked in a little bit, you're a little more invested. And that's when they start trying to bump you up and up and up and up and maximize the purchase price. So that's why I said before that context is dependent. If you're not super familiar with the market, it is really important that you chat with some resources who are super familiar with the market, because unfortunately that sometimes there's just no way to tell for sure how good or accurate the asking price is and what the vendor's expectations are. And sometimes agents will, skew the truth to get an offer from you.
Yeah, we also had my brother, which we've done a podcast on in the past, who bought his first home in Glen Innes. I think he spent somewhere around like $700,000, and this was at a point where properties weren't really moving, but this particular developer was in quite a good location and was priced quite sharply. And they just went bang, bang, bang. And you were like, okay, It was actually like slight 2021 vibes where it was like, if you want this, you're going to have to do it now. And you're going to have to know what price you're willing to walk away at it on. And I don't know when something like this will pop up again.
Yeah.
And it just actually happened that another developer around the corner, I think you might have told me about those units. They popped up around the corner and they were like $100,000 more expensive or something.
Yeah, so that's why it's really important to know the market, know the niche, look at what comparable sales are in the area so that you can pretty quickly validate what something might be worth roughly. And that is an example. I talk to a lot of clients at the moment because there's all the headlines about how it's a buyer's market. Things are really slow. Take your time, negotiate, get good deals, all that sort of stuff. It doesn't matter what market we're in, the best deals will always get snapped up quickly. It's just how it works because, there might not be that many transactions going through at the moment, but the ones that are on the good homes. There's plenty of investors out there who are trying to take advantage of this market. Even last week or the week before, we had one property where there was a couple of different sales channels representing this development. There was an internal team, a couple of agencies, and then my clients were trying to buy in there. During that week, there was like a couple of separate units that were getting multiple offers coming in purely because the asking price had dropped. And in that sort of situation, it's silly to try and negotiate because they've got other offers coming in at asking. If you come in below asking, they're not going to consider you and you're going to miss out on that opportunity completely.
Yeah, for sure. I think you just gotta, I think coming right back to the start, knowing the market, right? Know the market, the price, whatever the price is, what are the comparables, and then you determine where you pull the trigger. But the biggest thing I will say is this market is not going to last forever. I think we are getting to a point at the moment where everybody is in love with the share market because it's up 100% over the last 5 years in terms of the US market, and people are hating on property because it's down, and instead of in addition to it being down, we're topping it up. We're throwing money at it because of high interest rates. Interest rates have come down. The market will turn, and this opportunity is not going to last. And I would just say, take the discount that's out there. Like, make sure you're not overpaying for something. But if you buy and hold, the people who buy now, in my opinion, people are going to be saying, geez, didn't you get lucky buying at this point? But you did it when everybody was scared.
Yeah, no, I completely agree with that. Just making sure that you're being logical about it and you're not just trying to win the negotiation, and you say yes when the right opportunity comes up.
I do say that, but also I love to win a negotiation. So I understand where you're all coming from. Awesome. All right, we'll wrap it up there. Thank you very much for joining us. Negotiate on those properties. Pull the trigger so you can grow your wealth. Much love to Lighthouse Financial for sponsoring this episode. Please subscribe to our YouTube channel. Give us a review. Give us a like, and we'll catch you next time.
Thanks, mate.